Investors and traders, welcome to the channel. Market chart pattern today is 15th of June 2025. Hope everyone is having a good day and a weekend. So we'll take a look at the key markets for this video. As always, the video is for educational purposes only and it is not a financial advice. So what I'll do is something a little bit different. On my Substack, I've actually done a post in which gone through quite a lot of details. So I'll just try to run through that and then we can take a look at some of the individual charts as well. Okay, so this is the Substack. The link for the Substack will be available in the description. It's free if you would like to subscribe to it. That way you'll be able to get emails which you can actually check in your own time. Maybe you're going on a train, etc. I'm able to share more charts in this format, then I'm able to do videos. So I decided to go on to Substack as well. So let's start by reviewing the timing model. So we had some key timing coming in towards the end of June, and also on the weekly chart, which I don't have here, I also had 30th of June, so that is the same week actually coming up as well. So we need to give a few, on the weekly chart, couple of weeks on either side, and it does appear to me that the timing might have come in a little bit early. And what it means for the stock indices, we'll take a look at that a little bit later on, but we just need to keep the 26th of June timing coming in mind, and also later on we have the end of August, 2nd of September coming in as key date as well. I might actually stop sharing or frequently sharing the timing model because some of this is just really uncanny. So here I think I'll just share more of it on the Substack. So let's take a look at the debt market. So we'll take a look at how the US Treasury markets did. So let's start from the shorter end of the curve. So the debt markets, or the Treasury markets, they have been mostly sideways, and we are seeing a lot of swings to the upside and to the downside, but they seem to be respecting the key resistance levels that we have actually been watching for. So you can see that around this box 4.63%, this is where the market gets close to it. This is top of the range, and then resistance kicks in and then comes down to the bottom of this range. And then last Friday the yields were a little bit higher, but as long as this resistance is held, this 4.63%, on the 2-year, the yields can still move down to 3.2 to 3%. This is the pattern formation we are looking at. This is going to be this ABCD pattern formation right here, and the smaller ABCD also coming in the vicinity as well. And on the weekly chart, we are in this triangle pattern, and you can see that there is structural support. So this was potential double bottom. We saw a nice rally off it. The market came in, touched the 20-week moving average as well, and we have seen the market rally a little bit. But also look at this trend line. So it's just capping any move to the upside thus far. So one of the things with the triangle or these pennant formations is, when they break out on the either side, it's a pretty dramatic move. It's pretty violent as well. And with this kind of structure, look, it's just been going on for quite a long time. Breakout either way, I think it's going to be quite spectacular, and the chances are it might actually break to the downside. In that case, around 3% is where we have some structural support coming in as well. And then if we take a look at TNX, which is 10-year yield, here is our resistance. The market actually, the move from here, from the 61.8% retracement after it touched it for the first time, it was pretty strong move, but then there was just no follow through. So actually it tried to take out these highs but never closed above it, and this is why I've still taken this as the high, because in my opinion it's still active, and right from the 78.6% retracement as well. So as long as this resistance is active, we could be looking at a 1-to-1 price projection completing in the vicinity of 3.7% on the 10-year. And then if we move to the long bond futures, form this nice pattern formation in the shaded region. it kind of looks like a butterfly. And then what we have here is resistance from structure, ABCD 1-to-1 price projection completing. We have a couple of expansions coming in, 1.27 to 1.618 Fibonacci expansions, and 5.15% has thus far been a resistance level, and the price or the yields are still lower than the 20-day moving average. But we also have this trend line in play as well. But so the chances are maybe we just come down and retest this, and if we are able to break below this, then we could have an extended move right to this 3.95%. This is how I'm looking at the long bond yield. And if we were to flip this and take a look at this through the eyes of the futures chart, we can see that we had key support coming on the long bond futures. It's rallied right to the 38.2% retracement of this high to this low, and then what it is doing right now is essentially just found resistance and moving sideways. Then on the 10-year, I found good support right from here. This is around the time frame when actually the Moody's came out, and they actually said they downgraded the debt rating, the credit rating of the United States. This is when we started to watch this pattern as well. I wrote support zone despite the downgrade by Moody's, and thus far this zone has been respected, but actually we are in a trading range. So we found a bottom, you can see is a double bottom. Now we're forming a potential double top. Essentially it's a trading range. Eventually it's going to break out, and we think the breakout might actually be to the upside, and this is what we have in the long bond futures. 38.2% retracement acting as a resistance. Getting above this will be actually a bullish sign. Now Bitcoin has been really interesting. So let's take a look at this chart right here. So this is last Wednesday and this is last Thursday, and what we saw was actually the market began to go sideways and then closed lower for 2 consecutive days. So perhaps the Bitcoin was signaling a risk-off event could take place. And then what we have seen is Friday, the market respected this trend line, was still intact. And then Saturday and Sunday as well. So really small bodies, a narrow trading range pattern formation, but it hasn't really broken massively. We haven't seen these wide-ranging bars like here, what we saw in March and in late February. We haven't seen any of that. So this is perhaps an indication that the risky assets, particularly stock indices, they might not be impacted that much. So with regards to the geopolitical events that have actually taken place, so the futures have opened up. We'll be able to take a look at how the price action is at the open. So we'll just take a look at that a little bit later on. And this is and also what we are watching for is we have an objective of 114,500 on the Bitcoin, and chances are we are likely to get there. There is one more chance that if we break this trend line, we could be in an A, B, C, D price correction to the downside. So it come back a little bit lower, roughly just eyeballing to around maybe 95,000 region. This is the weekly chart of Bitcoin. Now let's move on to the dollar. So the interesting thing about the dollar is that it's actually quite weak, but it found support from this 1.272 expansion of this entire range, going back to October of 2024 to the highs which came in, and it kind of found some support. You can say that the reason was perhaps safe haven buying because of the geopolitical risks rising, whatever the reason might be. We just look at technicals. It was the 1.27 Fibonacci expansion, so it's kind of trying to hold in there. At one time last Friday it looked very strong, but you can see the sellers were up there and towards the close they actually sold quite a bit of it. So not a very strong looking candle formation. Nonetheless, it could be a micro double bottom right here, as on two consecutive daily closing basis. At least this low of 1.272 expansion has been held. So maybe we'll try to rally a little bit, get into this 20-day moving average, and also we had a rollover of the contract as well. So we have to acknowledge that gap because of that as well. On the weekly charts, on the longer term, it looks like the market is actually in the CD leg lower, but it could still have a rally. Maybe try to get to this 38.2% retracement, get to the top region. That is also possible, but I do think we are in the CD leg, and the market is likely to move towards the 94 level. This is what we are looking at on the flip side in the Euro USD on the weekly. So looks like the CD leg is active. It might get there, and if it did, then we will be looking at basically a 3 drives to a top pattern. That'll be drive 1, drive 2, and drive 3, and that could actually cause a pullback in this marketplace. British pound. So the British pound has been pretty strong. In fact, in this leg it was stronger than the euro, but I think euro is now stronger in comparison to the British pound, and it's also in this region where we are expecting a pullback to happen or resistance to come in, because it has done this this purple ABCD. So it's just kind of consolidating there, but very strong looking chart. I think the British pound has done pretty well of these lows right here, which came in the month of, there appears to be, I think, around maybe October time, 2023. Yeah, I think so. Okay, so this is what we are looking at in the Japanese yen versus the US dollar. Lots of sideways action after it completed our this pattern formation right here. It has actually moved lower. Now it's just consolidating. Gold. So the gold has been much stronger. This is the key pattern in the shaded region that we have been watching for quite some time now, a few weeks. And this is where really good support is in gold, and it because of the completion of 1-to-1 price projection right at the 61.8% retracement. It was just nearby, pretty strong support, and we have seen the gold actually rally, go a little bit sideways, test the bottom end of this range, and then beginning to move higher. So gold is strong, and we do have higher targets. So if we take a look at this on the monthly chart, we have higher targets in 3,650 to 3,800, and the gold is in this month of June is beginning to look quite strong. Month of May was inside bar, but this one has actually taken out the highs of the month of May, so that is an interesting formation. The momentum could actually carry it even higher. Silver not as strong as gold, but I think it could still get to $38.22 per ounce. Now let's move to the stock market. So let's take a look at the VIX index. So I have not got the chart of VIX right here, so I'm just gonna go to our charts and bring the chart of VIX right here. So one thing I just wanted to point out was, look, this is where we have seen really big spikes in VIX. Okay, so the biggest one, if you just go back to last 5 years, this is around the COVID. It reached around 85. This is last August. It reached the roughly 66. Back then there was a lot of panic because of what do you say, unwinding of the there was an unwinding of the carry trade, so because of that. And then this is when the whole tariff things came out. 7th of April was the low in the stock indices and high in the VIX. And here the VIX, let me actually rescale it. Here we go. It has actually just been very quietly rising, and the price closed above the 20-day moving average right here. Now the Other part to remember is that just drawing this trend line, these formations from these structures, it's found good support coming in from this structural line. And now if it closes above here, it'll have a pretty good support from this structure as well, getting above this structural line, and especially above this 25, which is where we have our swing high. It hasn't done that yet, but if it gets above that, then you know the VIX is on the rise, and the chances are it could get to 28.75, which will be the 38.2% retracement. It's got a chance to hit that, and what happens from there is something that we'll have to watch very carefully. But what I want to point out was we haven't seen these kind of volatility spikes, or this kind of volatility spike coming in from this geopolitical event. So maybe the market is watching it, but they might actually be considering that it is fairly contained, at least at the moment. Okay, now let's take a look at the chart of S&P 500, because of the timing coming in, which I might have come in a little bit early. And what I think, in my opinion, is that we might actually be entering in a trading range now. So the trading range is going to be perhaps around this region of this shaded region, which is a slight green color, 6,000 to 6,100 to 5,700 on the S&P 500 cash. This is something where the market might actually rotate into for quite some time, perhaps throughout the summer and towards the end of August, beginning of September, when there is a lot more clarity about the tariffs and also about the bill which is being presented in the United States, and then of course the geopolitical events taking place. Things begin to become more clear, and we begin to see a pretty nice rally. So that could be one roadmap which could actually see play out. So we'll actually watch it that way. Now, this is the 38.2% retracement around 5,700, which also is this symmetry. This is the pullback that we saw right into the 21st of April. So this is going to be the lower boundary of this, what we are watching. So it's possible that the market could just remain as the range bound. It was range bound for quite a while. When the elections took place, and then it looked a rally was taking place, a breakout rally could take place, but we saw the market begins to pull back. So we could see the market actually go sideways and perhaps then begin to move, and the move is likely to be the upside as long as the 7th of April lows are held. So this is what our view is. This is how we are following it right now. This is just the long-term weekly, and we can see that this long-term trend line is still intact, and this is the view on the S&P 500 E-mini futures. It had this nice pattern formation. I think I've shown this chart before, but I'm not really sure. In the videos we might have covered it. And again, it's painting something similar in terms of the pattern. This is going to be our symmetric move right into the 38.2% retracement. So this is likely to be a pretty good support level. And in terms of the correction, it's going to be about 6.25% correction from the current levels, if it were to play out. Now this is the NASDAQ 100 cash. Interestingly, it completed this ABCD pattern where CD leg is 1.618 times the AB leg, very close to forming new all-time highs, but not able to thus far. And if there is going to be a pullback, then we have this symmetry right here, 38.2% retracement, 20,450, pretty good support level because of the confluence. So this is what we're watching. Whether there's going to be a pullback, which more likely we are actually entering trading range to a pullback. Dow Jones. So the Dow Jones is much weaker than NASDAQ 100 and the S&P 500 because those are right here. This one is not even close to 78.6% retracement. So if it pulls back, it could pull back to around this, where I put the support in this region right here, 40,700 roughly. Very interesting that New York Stock Exchange Composite Index, it is actually stronger than the Dow Jones, because it's got 1,600 to maybe 2,000 stocks, including the ADRs. So there has been these European companies, companies from the Far East, such as Alibaba, also listed on New York Stock Exchange as ADX, and there has been strength in the foreign companies. This is what this index is reflecting. But notice also completed this 1.272 times the AB leg. And then what we are seeing is actually sort of a pullback happening, and let's see what sort of follow through we get. But chances are we are going to see some sort of a pullback happen in the markets. And if we just take a look at the world markets, this is the Hang Seng. Hang Seng kind of trading range, big rallies, then big sell-off, big rallies. So maybe it gets to the 61.8% retracement right here. This is SANSEX. This is the Bombay Stock Exchange Index. And here it's just gone sideways right here. There's still a chance that it could hit this higher level of 83,240, but if it begins to close below this trading range, then it could pull back much lower. Notice that this market topped back in September of 2024, and then it had this ABCD right to the 38.2% retracement. So this has been a rally, but it could just be a corrective rally, and we could still be in an A, B, C and a D leg to follow to the downside. In fact, this is more probable scenario, because we are actually between the 61.8% and 78.6% retracement, and I thought maybe we could actually hit the exact number, but if we don't, the failure will be very, very close for an index which is 82,000. We'll be missing it by just fractional points in percentage. So I think that will be close enough. So this is what we are watching. So it's got a chance then to pull back quite a bit if this range low is taken out to the downside in the SANSEX. German DAX, it's completed this pattern formation. It came very, very close. It didn't hit the exact number. Now it's actually pulling back. It was in fact the least its performance last week was the least performing index in the indices that we follow on the weekly closing basis, and then you can see that rounding top formation taking place. I think maybe if the pullback might be a little bit further to go. FTSE 100 completed this pattern as well. Didn't make a new all-time high, came very, very close to it, still got a chance, but looks like maybe if we begin to get a follow through after Friday's selling, then maybe it retraces lower actually. So these are the things that we are watching in the key markets. So thank you very much for watching the video, and if you found this of valuable information, then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. I am posting these charts on my Substack. The link will be in the description. The link is actually marketchartpattern.substack.com. It's free. You can come and check these out, for these charts over there, and if you want to subscribe, then the subscription is free as well. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.